Hello guys, it's Simo from Investment Research. Welcome to our daily analysis of SoFi Bank. So today, November 26th, 2025, I'm looking at SoFi trading at 28.44 in pre-market, and I have to tell you, this is a really fascinating moment for this stock. We're sitting at a critical junction here, and I want to walk you through exactly what I'm seeing and where I think this is headed. Let me start with the big picture. SoFi has had an absolutely monster year. We're up about 95% year to date. Think about that for a second. If you bought SoFi at the beginning of 2025, you've nearly doubled your money. The 52-week range tells the whole story. We've gone from a low of 860 all the way up to 32,733. That high was hit just 2 weeks ago on November 12th, and now we're about 13% off that peak. Now, here's what's happening today. There's some bearish noise in the market. I saw a Seeking Alpha article warning that the margin of safety isn't sufficient at these levels. Basically, some analysts are saying this stock ran too hot, too fast. And look, I understand that perspective when you see a stock double in 11 months. But let me dig into the actual fundamentals here, because I think the story is more nuanced than just overheated momentum. Let me talk about what SoFi actually does, because this matters for understanding where they're going. SoFi is in the fintech space, but they're not just another fintech startup burning cash and hoping for the best. They have a national banking charter, which they received in 2022. This is absolutely huge. It means they're a real bank with FDIC insurance. They can hold deposits directly. They don't need to partner with other banks like most fintechs do. This gives them better margins and way more control over their business model. They operate in three main segments. First is lending, which is their biggest revenue driver. We're talking personal loans, student loan refinancing, mortgages, auto loans. Second is their technology platform segment with Galileo and Technisys, which provides banking infrastructure to other companies. This is a pure B2B play. And third is their financial services segment with investing, crypto trading, insurance products. It's a true one-stop shop model, and that's the key to understanding their growth strategy. Now let me address something important. I know some of you might be looking for court report data on SoFi. I need to be completely honest with you here. The commitments of traders report doesn't apply to SoFi. Court reports are only published by the CFTC for futures contracts on commodities and major indices like the S&P 500, not individual stocks. So we can't use that data for SoFi analysis. Instead, what I'm looking at is institutional ownership data, options flow, and analyst positioning, which gives us a different but still valuable picture of smart money sentiment. Let me talk about the numbers that just came out, because this is where it gets really interesting. On October 28th, SoFi reported Q3 2025 earnings, and they absolutely crushed it. Revenue came in at $962 million, which beat expectations by a significant margin. But here's what really caught my attention. Adjusted net revenue was up 38% year over year to $950 million. Adjusted EBITDA jumped 49% to $227 million, giving them a 29% margin. This is a fintech company showing serious operating leverage. But the growth metrics are what really excite me. They added 905,000 new members in Q3 alone. That's a record. Total members are now at 12.6 million, up 35% year over year. Products grew 36% to 18.6 million. And here's the kicker. Fee-based revenue surged 50% to $409 million, now representing 43% of their total adjusted net revenue. This is massive because fee-based revenue is capital light, it's high margin, and it's more predictable than lending revenue. What really stands out to me is their 8th consecutive quarter of GAAP profitability. Net income hit $139 million with EPS of 0 and 11. For a fintech that was burning cash just a couple years ago, this is a remarkable transformation. And they're not just profitable, they're improving returns. Return on tangible common equity hit 8.5%, up 310 basis points from last year. The credit quality is holding up beautifully. Personal loan net charge-offs actually declined 23 basis points to 2.60%. Their borrowers have a weighted average income of $157,000 and FICO scores of 745 for personal loans, 773 for student loans. These are quality borrowers, and that matters a lot in a higher interest rate environment. Now, here's what really got the market excited. Management raised full year 2025 guidance. They're now projecting adjusted net revenue of approximately 3.34 billion, that's 35% growth, adjusted EBITDA of about 1.035 billion, and net income of approximately $455 million. They expect to add at least 3.5 million new members for the full year. These are aggressive numbers, but given their track record of beating guidance, I'm taking them seriously. Let me talk about what I see as the key catalysts going forward. First, there's their loan platform business. They're not just originating loans for themselves anymore. They're doing it for third-party banks. This is capital light, high margin business that's scaling rapidly. Second, cryptocurrency trading is coming back to the platform by the end of 2025. Given the current crypto market momentum, this could be a major driver of new customer acquisition. Third, and this is huge, there's talk about the Trump administration potentially privatizing parts of the federal student loan portfolio. SoFi is one of the few companies with the technical capabilities to service private student loans at scale. If this happens, it could be a massive opportunity. Fourth, if mortgage rates continue to fall through 2026, their home loan business could explode. They already saw 93% year-over-year growth in home loan originations in Q3. Now let me give you my honest assessment of where I think this is headed. Short term, over the next 2 to 4 weeks, I think we're in a consolidation phase. The stock needs to digest these gains. We ran from $50 at the start of the year to $32.73. That's over 100% in less than a year. Some profit taking is healthy and expected. I'm watching the $26 to $27 level as key support. If we pull back to that zone, I'd be very interested in adding to positions. Below 26, I'd want to reassess the technical picture. Medium term, looking out to Q1 2026, I think we have significant upside potential. If they deliver another strong earnings report in late January, which would be for Q4 2025, I think we could easily retest that $30 level and potentially push through to $35 to $37. The analyst consensus price target is around $24.90, but that feels stale to me given the recent earnings momentum. Some of the more bullish analysts have targets as high as $31 to $37, and I think those are more realistic given current fundamentals. Long term, and I'm talking 12 to 18 months out, I genuinely believe SoFi could be trading in the $40 to $50 range if they continue executing on their strategy. The fintech sector is heating up. Traditional banks are losing market share to digital-first platforms, and SoFi is positioning itself as the leader in this space. Their one-stop shop model is working. The cross-sell rates are at the highest levels since 2022, with 40% of new product adoptions coming from existing members. This is exactly the flywheel effect you want to see. But let me give you the risks, because I always want to be balanced here. First, at $28, we're at elevated valuations. You're paying for growth and potential, not current earnings multiples. If they stumble on execution, this stock could get hit hard. Second, competition is fierce. Traditional banks are waking up to the digital threat, and other fintechs are nipping at their heels. Third, we're in an uncertain macro environment. If we hit a recession in 2026, consumer lending could take a hit, and that would impact their core business. Fourth, regulatory risk is real. As they get bigger and more important in the financial system, regulatory scrutiny will increase. And fifth, there's always execution risk with growth companies. Can they maintain this pace of innovation? Can they keep adding members at these rates? These are open questions. So here's my bottom line. At $28.44, SoFi is not cheap, but I think it's fairly valued for what they're building. If you're already in, I'd be holding through this consolidation. If you're looking to enter, I'd wait for a pullback to the $26, $27 zone, or I'd dollar cost average in over the next few weeks. Above $30, I'd want to see confirmation of a breakout with strong volume before adding new positions. The things I'm watching closely are member growth numbers in the next earnings report, any updates on the student loan privatization opportunity, crypto trading launch metrics, and any signs of credit quality deterioration. I'm also watching the broader fintech sector sentiment. If other fintech names start breaking out, that could provide tailwind for SoFi. One more thing I want to mention. SoFi's brand awareness is still only at 9.1% of Americans. Think about that. Over 90% of the country doesn't even know this company exists yet. As they expand their marketing and brand reach, there's enormous potential for member growth. They're still in the early innings of building a household name in financial services. My prediction for December is that we'll see some volatility as the year winds down, with potential tax loss selling pressure, but I think we'll hold above $26. January could be very interesting with Q4 earnings coming out. If they beat and raise guidance again, I wouldn't be surprised to see a strong rally into the first half of 2026. So that's my complete analysis for today. SoFi at $28.44, consolidating after a massive run with real fundamental momentum supporting the valuation. Short-term caution, medium-term optimism, long-term conviction. The story is intact, the execution is there, but timing and patience matter. Thanks for watching, and I'll see you tomorrow for our next daily analysis.